Agrawal of Motilal Oswal Financial. We spoke to him earlier in the day. He says it is a good time to buy good quality stocks.
I'm not surprised by the strength because the monsoon has been also as strong. So, and it was expected to be strong, but it came on bang on little later. But the intensity of the monsoon, and that too after 2-3 years of very bad climate. So I think Indian economy is a lot more benefited by that. And somehow Brexit turned out to be, sell DM and buy EM types, or more like sell DM. And I think that was one thing which was not expected before the Brexit happened. I think all in all, it is for India looks to be good monsoon, lower oil price, stable currency. So looks to be good. I mean, foreigners have not sold. Yeah. There is no foreigners selling. There is no buying also. Domestics are, I think, month of June we saw it's a net, not much of participation. So I think it was standstill. There was no panic in the market, and then monsoon came, so it's buoyant.
Would you, would you expect to see more buying opportunities, more dips in the next couple of months?
I didn't know Brexit will give us 1,000 points opportunity. So who knows, what kind of buying opportunities will come. You just keep buying. See, markets are at a reasonable level right now. Markets are not very abnormal. Of course, it has moved from, say, 7,000 and all. So in the short-term parlance, there could be some correction or something like that.
The point here is, are you getting a bit worried about the nature of the market rally? The FIs and DIs, for example, have been net sellers or not bought much.
Not bought much.
A lot of mid caps have moved up. A lot of small caps have moved up. Is the quality of the market rally getting a bit worrisome for you?
Good stocks are doing well. Bad stocks are doing even better.
Yes.
So that's how I look at it. So it's good. It's good time to buy good stocks because bad stocks are becoming more expensive. So I think you got to buy what you understand. I mean, you are increasing your equity allocation, and whatever money you have, you just keep buying the right stocks. I mean, some stocks which might have run up too much, might have gone out of your range. So you buy some other stock.
Just wanted your view on the government reshuffle that took place a couple of days ago. The Modi government has made it very clear that performance will count and merit will be rewarded. And if you look at certain sectors also, there seems to be a bigger thrust now on infrastructure. What has your key takeaway been on the performance of the government over the last, say, 1 to 2 months, and how an equity market investor could benefit from it?
I mean, whatever Delhi does, we don't benefit or anything like that. We are just a spectator. We have to play what is given. So whatever changes are there, I think some of the changes are, far-reaching and very good. It clearly shows that this government is not sold out a department to anybody. Clearly there is one boss who is able to flex his muscle, and the guys who do well, he gets rewarded. The guys who don't do well, they get shuffled out or whatever.
Now let's talk about some of the broader sectors. NBFCs have done remarkably well, and you had your bets in this space, LIC Housing and maybe SKS Micro. But anything else that looks good at this point in time, or do you think the valuations have run up way too much?
One, the banking sector is seeing massive change. I mean, the PSU bank, which is almost 2/3 of the economy, 2/3 of the banking system, that's not in healthiest of the situation to extend lending. They have the biggest distribution in the country. So because of lack of capital or their bad books or even lack of dynamism in the management today, I think there is a lot of vacuum. And I believe as aggressively even the foreign banks have vacated the system here for their own global balance sheet issues and things like that. So there is a big vacuum here. And there only the private sector banks and the NBFCs are nothing but private sector arm of financing arms. So they are also doing very well. Now, on top of it, what has happened is the cost of money, global money has become very cheap. And local money also is now, there is no good borrowers. Because now the good borrowers will get too much of money at too low a price. And bad borrowers will not get any money at any price. That's the kind of contrast which is shaping up. So a well-managed NBFC who can lend money at a good spread, I think those companies, but not in this quarter. I think starting next quarter, you see the aggression in the margin expansion.
Okay, we'll take a break on that note.